Of course, some news on the Biztech Asia Midday Marketwatch with our colleague Brian Fernandez over at Biztech Asia. Today, he is talking with Teng, market analyst at APAC and Canada's CMC Markets. The conversation will bring about insights on regional market performances and touch on some of the risk and data points that will impact us for the rest of the week.
Tina, one of the key things that stands out is the fact that the All Ordinaries is down 4.44%. Please tell us why that is the case and why markets in general are down today.
So the broad sell-off was really triggered by the higher than expected US CPI data last Friday. So investors now are fearful of higher than planned rate hikes by the Fed. So originally the Fed already said they would raise the interest rate by 50 basis points, but because the CPI data was out much higher than expected, so
yeah,
now
so the CPI data came in, just for our audience, at 8.6%.
Yeah, 8.6%. Expectation was like between 8.3 to 8.5. The peak was in March 8.5, but this time is even higher, 8.6. Even the core inflation was higher than expected. The core inflation is excluding food and energy. So that's why the markets now are pricing in a 75 basis points rate hike by the Fed. So this is just a broad risk off triggered a very sharp sold off in the markets, especially the Australian markets. You talk about like 4.4% down today. Actually, ASX 200 has been sold off since last week when the RBA has raised the interest rate by 50 basis points. That surprised the markets. So investors didn't expect that, including the Australian bond markets got sold off as well. So the whole market sentiment now is just risk off. Yes, and fears of a recession is to happen as well. But it's more like just that the whole sentiment is down. What we can see, like VIX, that's a CBOE volatility index, that's a fear gauge of the whole markets now. Now it's above 30. So usually when VIX is above 30, this means it's like kind of like extreme fear in the markets, this whole sentiment. So that's a factor has driven down the whole broad equity markets.